Okay, folks, welcome to Sunday Night Futures Live. Let me just check my settings here. If somebody could get me a audio check, I want to make sure that mic is working properly. I would appreciate it. The futures are open, and we have some big headlines out this evening that President Trump has placed tariffs on aluminum and steel, 25%. We spoke about this the other day. Why is my camera not working properly? Pardon me, folks, as we deal with technical issues. I'm not sure if it's my software or what. All right, so YouTube says we are live. Yeah, it looks as though I am. All right, let's try this again. Looks like it's unfrozen. Okay, all right, we're working again. Beautiful stuff. I don't see any notes. That means that something's wrong because I see on YouTube, Jody, Corey, hello, folks. I am not getting the notes on my software. Oh, there it is. I do have them. All right, it's working. Word. Okay, so as I was saying, we have the futures market that is open. You're looking at the E-minis. We're going to drill down to a 5-minute chart. And we are gapping down on tariff talks. And the president has placed tariffs effective tomorrow, 25% tariffs on steel and aluminum. And it is going to be a very, very volatile Monday. So let's let this settle down. We're seeing a potential reversal bar on the E-minis. We were down over a third of a percentage point. Now we're down only 0.19%. Let's see who wins out here, bulls or bears. First thing we're going to do is we're going to set up an alert here. Do we break to new lower lows? If we do, that is not going to be Monday morning. Jody, hello to you. Thank you for my audio check. I appreciate that. Mr. Corey, welcome. Talon, welcome, brother. Mr. Pete, welcome. Okay. So let's see. We'll create an alert up here. This would be an event should we rally through the closing price of Friday on the E-minis. Therefore, we would be positive. That would be a bullish reversal bar. If you want to take a look at what it looks like on a 15-minute chart at current, that would be a very, very bullish event. We're not there yet. We have 11 minutes left to go until that is in the books. So do we fade or do we rally? That is the big question. Let's check in with the NQ. NQ is down about a quarter percentage point, but the same story here. We were down lower. We have since reversed. We're down about, I guess, a half percentage point. So we set our alerts. Do we break out or do we fade? We have the second 5-minute bar, which is now open. Let's see whether or not we get a new higher high. Let's check in with the Russell 2000. Russell 2000 down about a third of a percent, but again, it was much lower. We've seen the same price action here. You're having buyers step into the breach. They are bidding the futures off of session lows. But again, do we break out or do we fade? Until this first 15-minute bar is in the books, I wouldn't do a darn thing here. I wouldn't short. I wouldn't buy. Okay, let's check in with the Dow. Sorry about that noise. The Dow is down 0.21%. We were down much lower. This has really rebounded quite a bit. Let's check in with volatility. Volatility opened up. It is now down. That is bullish for equities. However, we have gapped up. It's hard to see. We just broke out to new 5-minute higher highs on the Nasdaq and the Russell 2000. We have gapped up this second 5-minute bar on the VIX. Not much price action here to speak of, but we are down with equities down. That tells me that there's not a lot behind this sell-off at current. Let's check in with bond yields. Yields are up. The dollar. The dollar, big gap up here on the dollar. That does not bode well for commodities. If I see commodities up right now, I mean in gold, silver, I think copper broke out last week. That would be a bullish sign for the commodities space, because generally gold and silver trade inversely of the US dollar. And if the dollar's rallying along with gold and silver, that just tells you that gold and silver are underowned. Mr. Sean, welcome. Okay, let's take a look. What do we want to talk about? Let's go to gold. So gold, I'm not loving this chart at all. Granted, we're only down fractionally, and we are consistent with the equity market in that we moved lower. We are now moving higher. The problem is that unlike the equity markets, unless I missed it, we have a head and shoulders setup forming. Left shoulder, head, right shoulder on gold. Now, we are long of gold, and I've been wanting to put out a hedge by selling call spreads, but we may not get that. I was hoping for a 3,000 handle and then to sell calls at that level. We came within $100 of that mark last week, but we faded by the end of the week. Let's take a look at silver. Let me just pause here for a moment. That's our third 5-minute bar. This will conclude once we close out this 5-minute bar, that first 15-minute bar. All right, now let's check in with silver. Silver not doing well at all. Silver is down about a percentage point. Okay, so those are the precious metal names. Let's take a peek at energy. Oil opening up. much like the equity market, they dropped it at the open. We are now positive. That's very bullish. Let's check in with this first 15-minute bar. We went long of oil last week. Very, very tight call spread. As a matter of fact, we have our closing order here. Let me just make sure it's still active. Yeah, right here. Good till cancel. We are long of the oil futures market. Let's check in with natural gas. Natural gas gapping up here. Very bullish on natural gas. I'm going to talk about this in a little while. We have a big put spread expiring this week on Boyle, which is a natural gas leverage product for leverage product of natural gas. Very, very volatile. So we may be opening up a new tranche of a put spread on Boyle as soon as tomorrow. Let's just see how we open up. Now, energy looking bullish. RBOB gasoline prices last week surged big time. Let's take a look at a weekly chart. This was last week. This is not reflective of the price move that we saw on GASO. That's the symbol on stockcharts.com for a pretty hefty move last week on gasoline futures. But it's not really reflected on this chart. I'm surprised. I'll go to that in a moment. I'll bring it up to show you because this is not reflective of that price move. I will say this though. What you have on this chart here, weekly time frame of gasoline prices, is a Bollinger Band squeeze that is getting very, very tight. Not necessarily the pattern that I like where you have both Bollinger Bands trading inside the Keltner channels. Assuming that, are these two standard? Yes, they are. But this is still very, very tight, this setup on Bollingers. So what I want to know is, actually, this is this week. We closed off the highs last week. So we did have a measurable move to the upside last week. Even though this is a red candlestick, it just means that we close off the highs of the week. So if we begin to break out on gasoline to new weekly higher highs, I'm probably going to get long of gasoline in the futures market. I don't think you can in the equities market using leveraged product or ETFs. I may be wrong about that. Fact check me on that, please. Let's just check in with the... Just because these are on Thinkorswim, these options, doesn't mean that they can be traded. Why are there no prices here? This is not a very liquid market. I don't think these are tradable. No, they're not tradable on Thinkorswim. Okay. So we can't trade this unless I buy the futures contracts. I don't know if I want to do that. All right, let's take a look at copper last week. Copper is setting up really, really nice here. We don't have futures. We don't have options on copper. Too bad. Can't trade it. Palladium looking weak. That's down a 0.5 percentage point. Platinum. These are all stalled out a little bit. Let's take a look at ag. Corn. This is last week's price action on a weekly time frame. They tried to take it down. They reversed it. They couldn't close it at the highs of the week, but I'm giving odds or the W for the win column to bulls here. They saved the week on corn. This could have gotten ugly. So what I think is going to happen, we're going to do a retest this week of around 483, and then we'll probably move up higher. Soybeans, similar chart to the to corn. Not much happening here, meeting a little bit of resistance. I think odds still favor bulls. We're getting higher lows and higher highs. Tight Bollinger Bands. I think this gets resolved to the upside. Now we are long of soybean oil futures, if you can imagine that. We have a put spread that we sold. Not much happening here last week. We were up and then we were flat. Right now, I think we're flat on the trade. Maybe up like $60. I didn't cover wheat. Let's take a look at that. Wheat looking really good here. Very, very nice. We have a breakout. Gold just moved to a new higher high. We're going to go back and check that out. I may put out an order to sell those calls tonight. Not enough premium here to sell puts. Ivy rank is pretty good. Let's go back and check that out. Going out 40 days. That's when time decay really picks up, around the 45, 40 days. And when we're selling premium, so we want the time decay. There are very few things in life that time is friendly to, but it is friendly to option sellers. Got to get paid a little bit more premium here. Oh, these are thin markets. These are very thin markets. Nah, not worth it. Too much risk. Good luck getting. They won't give you a hard time getting into the trade, getting out of it. It's probably going to be a little bit difficult. So we'll pass on that. Too much risk, not enough reward. I get the vibe. I didn't cover something here. Oh, foreign currencies. Let's check in with the Japanese yen and euro. The euro last week did not close well. Faded off the highs of the week. Looks like we're opening up now. Actually, no. This is not right. This is wrong. We're gapping up on the week, yet it's saying that we're down by nearly a quarter percentage point. That must mean that we opened higher and we faded. No. Showing that we gapped down. Doesn't make sense on the weekly chart. So it looks like this is right. The weekly chart doesn't make sense at all. So we are down using intraday charts. We're getting a reversal bar. This is bullish for gold. If we get a rally in the euro, let's see whether or not it's got the cojones big enough to take out Friday's closing price. Or do we fail and fade even further? Now, looking at the Japanese yen, it had a very good week last week. It is gapping down at open. Had that first 15-minute bar close. Good closing 15-minute bar, but it's threatening to take out the lows. We don't know yet. We don't have a crystal ball. We wait for, that's my fault. We wait for the validation. But if we do take out this 15-minute bar, the first one, that is not going to be good for the Japanese yen. But I'm not going to be surprised to see us move higher here because the closing price action last week was very strong. Okay, let's check back in with gold. All right, so gold now up on the session. Nice bullish reversal bar. That first 15-minute bar, then we got follow through. Let's check back in with equities, see how they are doing. ES remains down. We're not getting the follow through yet anyway, as we're seeing on gold. NQ, we may get the follow through here. Let's put it above this moving average. Okay. Bitcoin. We skipped Bitcoin. Let's check it out. We also skipped cattle. Cattle, I believe, has begun to break down. Yeah. Yeah. Let's remove. I got to keep these drawings. I'll come back later and clean this up. But cattle be coming under pressure these past couple of weeks. Bitcoin. Where are you at? There we go. Bitcoin opening up. Actually, it's been trading all weekend, but at current is up 0.40% relative to the close on Friday. I think that is it. Yeah. We did. Let's just check back in real quick with natural gas and silver and oil. Natural gas holding gains here. Silver coming off of its lows, but still pretty weak T here. And oil. Oil looking pretty good. 4-hour view. We've stopped going down on oil. I think we're going to get a rally here. How does it last? I don't know. But I think we're going to rally on oil, at least short term. So let's get to it. All right, we have 52 people watching now, 53. If I can get 53 likes, I would appreciate it. It helps me out with that YouTube algorithm you always hear about, that mythical YouTube algorithm. And let's go to it. All right, folks, if you haven't already put your symbols in to have stock chart requests performed, please do so. You need to be a member of our forum. It's free. Enter your symbols and just do it right here under feed. You can join up, no credit card required. Use that link. All right, we have Steve, Talon. Talon, you want a symbol? David's got AA. We're going to be going over AA, no doubt about it. So let's get to it. Let's talk economic data. So the macro theme, before we get into it, is I want to talk about, I want to do an I told you so, okay? I don't like doing it, but there are times where, you know what? I'm going to say it. I told you so. I was hammering the table about how they were going to revise down the jobs from the Bureau of Labor and Statistics very soon after Trump took office. What did they do last week? They revised down jobs, and they revised down jobs big. So keep in mind that they already did a revision back in August. It was 818,000 jobs as reported as being new between January 1 and March 31st, I guess, if there's 31 days in March. 30 days past September, April, June, and November, all the 30 days in March. So they revised those jobs down by 818,000. Then they did it again last week. So we knew it was going to happen. We knew they were manipulating the jobs data, and the market didn't like it on Friday. It did not like it. Remember, every time those jobs data, the fake job numbers came out, the stock market went up. Now it has to look itself in the mirror and say, okay, you know what, something's very, very wrong here. The jobs that were reported were fake, absolutely fake. They were made up, fictitious. And now they need to correct. That's my opinion anyway. So this coming week, we get the NFIB. This is the Small Business Optimism Index. It's very, very influential for small cap stock. We have Jay Powell in front of Congress and a whole bunch of Fed heads out tomorrow. Or is that Tuesday? No, Tuesday. Sorry. Nothing scheduled for tomorrow. These are all Tuesday events. On Wednesday, we get CPI. Watch, very, very important. Very important. Watch the core. This is all a fake number. You might as well take the number that they report and double it to get the real number. Remember, this no longer counts in coffee, right? They took it out last year. What have coffee prices done over the past year? They've skyrocketed, but they no longer count in the CPI. And you could count in a dozen other names. They no longer count into the CPI. Why? It's inconvenient. Thursday, we get initial jobless claims. They ticked up last week. The PPI, that's the Producer Price Index, that comes out on Thursday. On Friday, import prices. Remember, we don't manufacture stuff here anymore. We import it. So this is just as important as the CPI and the PPI. What are we paying for imported goods? Retail sales, huge. So we have a lot of economic data coming out this week. Industrial production, big. Watch out for business inventories. If you see business inventories rise, then they have to worry about retail having to cut prices to get rid of inventories. Earnings coming up this week. This is not right. Shopify, didn't they report last week? This is right. I thought Shopify reported last week. Okay, so tomorrow we get McDonald's. In the morning, pre-market, Rockwell Automation. It's a good company. We get, after the close, Lattice Semiconductor. That's the only one I know after the close. On Tuesday, pre-market. Oh, that's Spotify. It's Shopify. Duh. Coca-Cola pre-market. Humana. BP, British Petroleum, more energy stocks. Carlyle Group, Marriott. Supermicro reports after the close. Last I looked, they still hadn't filed their SEC documents. DoorDash, Lyft. Wednesday, pre-market. Barrick Gold. We'll talk a little bit about the gold miners in a moment. Biogen. After the close on Wednesday, Reddit. AppLovin, good stock. Dutch Brothers, Robinhood. Cisco. Thursday, pre-market, Datadog, great company. CyberArk, we were long of Datadog, we did very well. We've traded CyberArk in the past, did well. John Deere, pre-market. GE Healthcare, great stock. After the close on Thursday, Coinbase, Twilio, DraftKings, AMAT, that's semiconductor manufacturing play. Airbnb, Palo Alto Networks, great stock. So we have a lot of cybersecurity stuff coming out this week. Roku. And on Friday, we get the demons of the pharmaceutical index. Moderna, Pfizer reported last week. American Axle and Manufacturing, that's a sleeper stock. It's a good company. So another busy week for earnings, but these are not your top tier mega cap plays. They're just not. Cisco used to be, AMAT used to be. They're not. Those plays have already announced, and we're going to talk about just how expensive or how cheap after their reporting we are now at. We are not cheap. We are quite expensive, even after all the earnings that have been reported out of the QQQ names, out of the S&P names. We are still sporting nearly a 38 handle on trailing PE multiples for the S&P 500. And on a forward-looking basis, the forward 12-month PE ratio for the SPX of 21.1 is above the 5-year average of 19.8 and above the 10-year average of 18.2. So, not ridiculously expensive, but expensive. In terms of, let's refresh this because this changes quite often. In terms of Fed rate cuts, don't expect them. They're not coming anytime soon, absent an event. I don't want to repeat myself, but I spoke about this on Thursday night. The only way that President Trump is going to get his way with the Federal Reserve is not by the Federal Reserve cutting rates. They can't do it. Inflation's too hot. We don't know the outcome of these tariffs, but to free up the housing market, I think that what they're going to do is they're going to begin QE operations, meaning they're going to buy longer-term bond yields because the markets want higher yields for that debt. They're not playing the old game of we'll buy your bonds at any yield. It's okay. They're not doing that anymore. That's over. So what they're going to have to do is that they're going to have to be the buyer of last resort. The problem is they're going to need a reason why. Why are we going to be buying debt in vast amounts, which has to happen? They can buy debt for a week, 2 weeks in moderate amounts. Nobody's going to raise an eyebrow about it. But if they start buying 30 billion, 50 billion a month, that's going to get noticed by the market. Questions will be answered. They need to act the hero. Something just fired off. Let's see what that was. ES, looks like ES may have taken out session highs or lows. Not quite sure yet. Actually, it was both the NQ and the ES are now at or above new 15-minute highs, maybe? Yes, new 15-minute highs, but still down on the session. We have an alert if we fire off or trade above the closing price of Friday. We'll come back if we need to. So the Federal Reserve needs to be the white knight. They need to come to the rescue of the markets. But what's the crisis? We don't know yet. They can't blame it on Trump. They need to find a reason to come back in and buy all this debt. So that's why I'm worried about volatility. So at current, long story short, there will be no rate cut for March. There will be no rate cut for May. June is now a coin flip. This was above 60% on Friday. Now it's a coin flip. You have to go out to July for a probability of a cut now. So the street's not going to like this. Job data that has been reported over the past year is being revised down. Inflation is going up, yields are going up, and the probability of a cut is unlikely anytime soon, and stocks are priced for perfection. What do you want to do? Buy stocks? We're short. We're shorting stocks. We have certain long names that we think are going to do well, and there are names that are going to do well. We're going to talk about them shortly. Namely, old stodgy names like aluminum and steel plays are going to do well. Why? It's because tariffs just got placed on imports. They're going to do well. We talked about this only a couple of weeks ago. Watch out for these old stodgy industrial metal names. They're probably going to come back to life. And U.S. Steel, which I was eyeballing early last week, by the end of the week broke out. So we may be long of it fairly soon. So in terms of jobs data, I'll share this out. You can analyze this as you will. But long story short, there may be some excitement about the U.S. jobs report in January, but job numbers were for 2024 were revised down by 600,000 jobs. This is after the 818,000 revision lower in August of 2024. So this means that we had over a million, well over a million, 1.4 million of job reduction or over-reporting in 2024. Average hours worked. Something else just fired off. Silver is out or above. Yes, bravo. All right, so let's set up another alert here. Silver trying to make a comeback. Okay, so average hours worked by Americans fell to 34.1, the lowest since the great financial crisis when excluding the 2020 crisis low. Here you have it. This is off of Fred, average weekly hours of all employees. The first thing a company is going to do before they add to staff is they're going to offer overtime. Before they put out a posting for a new hire, they're going to offer overtime. Not only are we not seeing overtime offered, we're seeing average hours worked go the opposite direction. This is very, very bad. Very, very bad, especially when you have inflation going up. The U.S. job market is not strong. Do not fall for the media narratives. The number of discouraged workers in the U.S. spiked to 630,000, the highest since the 2020 crisis. A similar jump was seen in the great financial crisis. Americans are massively giving up, looking up for a job. So here's what's going to happen. These people no longer get counted in to the U3 BLS report for unemployment, which was reported on Friday. To find these workers, you need to go to the U6 report from the BLS so that they're represented there. But the media won't report the U6 number. The U6 number was the original unemployment report until it became, in the early 90s, during that recession, way too inconvenient. So they went to the U3 and they ignored these people. They stopped looking for work. They're done. You got to go to the U6 report. It's up over 7% unemployment in this country. Not for this 4% stuff. That's nonsense. U.S. private sector job creation is at recessionary levels. U.S. private jobs, excluding education and healthcare growth, contributed in total payroll growth fell to 35%. Such a crowding out of the private sector has never happened outside of recessions. What is happening here? Well, it's telling you we're setting up for recession and the fact that we may already be in one. And here's the problem for the equity markets and for the inflation story. Now, when you talk about the M2 money supply, this is all the money that is in existence. All right, so when you get strong M2 money supply, you get, granted, increased liquidity, so you can borrow. There's plenty of money to borrow out there. So once that dries up, that's when everything really locks up. Because especially if banks won't lend to banks, that's a big problem, and the Federal Reserve's got to step in. You could see a weaker U.S. dollar because of fears of inflation. You could see asset price inflation. You're seeing that in equities, 38 handle on the Shiller-PE ratio. So you're seeing it in asset prices, in housing, across the board. Not everywhere, but in certain areas. So if you see the stock market break out this week, that's inflation. Wage pressures. We're not really seeing all too much wage pressure. Now, once this becomes a real big problem is the velocity of money, meaning the spending of the consumer. They get that dollar on payday, they spend that dollar next day, and that dollar gets sent out to another party the following day. The velocity of money. People are feeling confident, they're buying stuff. So if that you can have high M2 money supply with no inflation as long as people aren't spending money. So watch retail sales this week. That's going to be a critical number. So we know what happens with inflation moving up higher. It's not bullish for equities in general. What is it good for? We've spoken about the fact that we have inflation, no doubt about it, and we have jobs numbers that are being revised down. What'll do well in that environment? Gold, it's been doing well. We hit new all-time highs last week. That's a message. People just look at gold and they say, it's an old metal, it's a relic of the past. It's not. What gold is telling you, what gold is telling us, it's saying that the Federal Reserve, even with yields moving up higher, a lot of people don't believe that gold and yields can move up higher. They can. They did it in the 1970s and the early 1980s. They did it because the Federal Reserve was so behind the curve on raising interest rates. We have a Federal Reserve that just cut by 100 basis points, and now they're on pause when they should probably be cutting. Now with the new jobs revisions, maybe not. Now we have to wait and see because they're data dependent. So the gold market is screaming stagflation, new all-time record highs last week. Now, in terms of gold, mining stocks, which we are long, I mean, they're cheap. Nobody wants them. Nobody talks about them. And we have Barrick Gold reporting this coming week. So after another pivotal week for gold, it's worth emphasizing that gold mining companies are also undergoing significant fundamental improvements. Cash flow per share is rising rapidly, now reaching its highest levels in 13 years. The trend in the mining sector bears a resemblance to what happened in the energy industry, where skepticism persisted for years, with many investors losing faith in its profitability. Of course, that was precisely wrong time to hold such views, as energy companies went on to become highly profitable and efficient. The similar transformation now appears to be unfolding in the mining sector. Case in point, take a look at oil. What does oil have to do with gold mining stocks? It has everything to do with gold mining stocks because it's the largest input cost for gold mining companies. Oil is doing pretty much nothing, with a bias, frankly, recently to the downside. So if you have cash flow rising on these companies and their input costs are going lower, their margins are expanding. So they're making more money. If oil breaks out, then it becomes more questionable. But if the price of gold moves up, well, then that offsets the higher price of oil. So right now, nobody wants the gold stocks. They're doing very, very well. They're cheap. Let's see if ChatGPT can answer me. What is the average PE multiple for gold mining stocks? So we know that the trailing PE The trailing PE on the S&P 500 is 38. Now, the large cap names, Barrick Gold is at 15.76. Gold Royalty Corp stands at 149. I don't even know that company. The Van Eck Gold Mining ETF is trading at 12. 12. That's the senior miners, which is below the 5-year average of 15 and a 45% discount to the S&P 500. These metrics suggest that while gold mining stocks have benefited from rising gold prices, they may still offer value opportunities for investors. Source Barron's. Let's see what that alert was. Certainly was in silver. That's the Japanese yen. All right, so we're not going to check back in there. All right, so we are long of the junior miners. Junior miners, monthly chart, doing very well, up 4.77%. If you want to take a look at the senior miners, GDX, which I just quoted, stellar month so far, up over 4%. If you want a lot of risk, this is the leverage product putting you long of the senior miners. 2 times the move of the GDX, up 8.85%. We are long of the GDXJ and this product, NUGT. We will remain long for the foreseeable future. And we'll add when appropriate. Now, the other area of the market that we like quite a bit, and I have been very, very vocal about natural gas, and in particular, natural gas LNG plays, liquefied natural gas. Remember who won the Ukraine-Russia war? Who won was the United States, because our exports of liquefied natural gas to Europe was nothing before that war. Now we make up for about 35, 40% of their liquefied natural gas imports. So who won the Ukraine-Russia war? We did. EU gas storage is now below 50%. Courage and unpopular decisions on behalf of the EU are urgently required, finding as many as long-term LNG suppliers as possible. We are long of FLNG, which did not have a good day on Friday. In fact, it didn't have a good month so far. But here's what we're looking at here, is that we broke out last month, retest so far this month. If we get a follow-through, on FLNG, I mean, I added more at the lows of November. I'm not really looking to add more here, but if you're a member and if you want my opinion as to whether or not it's time to buy, you just ask me and I'll get back to you. So FLNG monthly breakout, and we'll keep this active for as long as possible. That works. So this is one of the plays. Another play is LNG, which is doing really well. The reason why I'm long of FLNG, we reduced our basis cost, so our dividend yield on that is around 12.5. I'm not sure what it is on LNG, but we're reinvesting dividends on FLNG. So technically, we are continuing to average into that position. What time we got? We only have 10 minutes left. Wow, tonight went fast. All right, let's do some chart requests. Doesn't look like we have a bunch tonight, which is fine. All right. Jody with her NVIDIA. Okay. HLF. UPC from Michael. Mr. Sean with his ATOM. AG. Talent. AA, and we're going to go over X as well, because those names are going to benefit from what? Trump to announce 25% tariffs on steel and aluminum imports on Monday. So let's kick it off with U.S. Steel. Now, U.S. Steel is in a downtrend. Let's put it this way. You can make the argument that we are in a secular bull market, but in a cyclical bear market within the confines of a secular bull market. Because what does that mean? It means that we were in consolidation range. We broke out back here, August of 2023, skyrocketed up higher, up and into an upper band of resistance. Wow, I just had a whole bunch of alerts fire off. NQ, ES, these are all now higher. Now positive. This is the power of knowing where to set your alerts. So you have NQ up now by over a 1/4 percentage point. ES now positive. RTY now positive. That's a Russell 2000. EMD, this is the mid caps, still down 0.22%. YM, Dow Jones, now up marginally, fractionally. Let's see what gold is doing. Is gold capitalizing? What are we doing here? We're actually off the session highs. NG still up by about 3.5%. CL up 0.21%. How are we looking? Let's get off of this 5-minute chart stuff. All right, let's leave it off with silver. We'll go back to U.S. Steel. Silver's still down about 0.75 percentage point. All right, so long story short, I think that we are in a trading range, not a trading range, a consolidation or a trading range technically. We were higher on the month. We faded off the highs, but I think that's going to get resolved this coming week. Let's overlay some trend line. By the way, we're using TrendSpider, automated technical analysis. Use the link below. Get the minimum of 35% off. If you watch us on Twitter, there's a link above. So I'm not loving the topping action here. When I see this candlestick, topping tail wick, shadow, call it cupcakes, it doesn't matter. What implies is that you have sellers above. So we take our crayon out, go like this. Okay. So we have resistance up at $41.41. We have support down here. We're in a rising triangle formation, wedge formation, blah, 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 whatever you. It's consolidation, and we're moving up incrementally. I think tomorrow's news is going to take this up higher rapidly. Let it settle down. Let's apply the 3-day rule or the 3-week rule if you're a long-term investor. What's the 3-day rule? I've been going over this a lot lately because in this type of a market environment, you're seeing a lot of failures out there. Breakouts are failing. It's a sign of a market top. So when you get that, you want to adopt a strategy of the 3-day rule when you're using a daily chart. And in this case, I would wait for a breakout and a close above $41.41. Then you want to wait for your retest. And then you want to wait for your second retest and follow through to the upside. And you nibble during that process. Don't go jumping all in at once. If you want to buy 100 shares, buy 20 shares in the breakout. Retest, buy another 20 shares. Follow through, buy another 30 shares, etc. Now, if we pull back to support, what's our Fibonacci retracement? If we close above $38 a share tomorrow, I would nibble. I'd be okay with that. So these are your auto Fibonacci's. These are your trend lines. That's the algorithm. So this is not a screaming buy here by any stretch of the imagination. Leg in. There's going to be a lot of volatility tomorrow in U.S. steel. Don't get caught up in the fray. Let it settle down. Watch how it closes. Another name out there that we like, Alcoa. Had an up week last week, despite the fact that equities were under pressure. Alcoa closed up. We're in a downtrend channel. I'd be an aggressive buyer were we to close above 38 bucks a share, and really aggressive if we break out and close above $40.62 on Alcoa. Daily chart, not much to talk about. There's still selling pressure here. So they're going to spike these names tomorrow morning. Don't get lured in. Remember, U.S. Steel at best is in a trading range. Alcoa is in a downtrend channel. Don't go chasing the rally. Let it settle down. Then you buy once you're convinced that the rally is for real. Watch how it closes. It doesn't matter where a stock trades intraday. What matters is how it closes. NVIDIA for the lovely Jody. Now, NVIDIA was up about 8% last week. Huge bullish engulfing bar. I mean, wow, real pretty stuff. But I can't buy it until we appear to be poised to close out the week. I don't want any sensitivity above this resistance level at 129.84. Let's call it 130. Remember, their earnings are coming up soon. Daily chart. No, great rally here, but no breakout. Where's my volume? Stokes looking good. Where's my volume? What happened to my volume here? Got to have volume. Volume was not great. I mean, great price action, horrible volume action, below average volume. Not loving it. It's got to show us. It's got to prove itself worthy of our investment dollar. Herbalife. This one I remember. Carl Icahn. There's nothing to really get bullish about here. In fact, when you're looking at the Fibonacci retracement numbers, I mean, we're getting rejected at the fibs. I want to find a reason to like it, but I can't. Now, when you overlay the automated trend lines here, I did not draw these lines. This is the algorithm. We broke down. This is a short, and we're probably coming all the way down to, wow, this thing is trading below 10 bucks a share now. Wow. Bill Ackman should have stuck with his short. We're coming down here to $3.21. I would avoid this stock. I don't think you're going to be able to get the shares to short it, but I think that we're going to break down further. Now, if we manage to break out and close above, I don't know, $6.80, then you revisit it to the long side. But right now, the path of least resistance is to the downside. I think we're going down to a 3 handle soon. So I would avoid this. UPC, I can't even read my own handwriting. UPC, is that right? UPC. All right, UPC, Universe Pharmaceuticals. Oh, come on, penny stock. Don't buy penny stocks. Don't do that. Oh, this has got pump and dump written all over it. I would rather see you buy 2 shares of NVIDIA than buy these companies. You have greater probability of success. There's nothing to like here. I would have, in fact, ongoing concern issues looking at this chart. I mean, this is up at 189. Jesus Christ. There's nothing to like here. I see no redeeming qualities to this name. Watch this, it skyrockets tomorrow. The only thing I could see here, I can't. It's bearish. I have no support levels to say, okay, maybe here. This is a perfect example when you're using stochastics. People say that if you're reading technical analysis for dummies, it'll tell you when the stochastics go down below 70, you need to buy it because it's oversold. Yeah. How would that have treated you back here? Because we've never been at back 70. Well, we did go back above here, but back here, we're at 25, and we've never gone back above it. As a matter of fact, we haven't been above 50 on stochastic since October of 2024. This is how long in the tooth this oversold condition can last. So try not to use the stochastics as overbought, oversold. It's a trend. It's a momentum indicator. It's a trend indicator. You look for divergences. I use RSI more for overbought, oversold, not so much the stochastics. I would avoid this name, long story short. I don't want to see you lose money. Let's go to comments. I haven't checked back in. Holy cow. Lots of comments. You're welcome, Jody. All right. What else do we have here? ATOM for Sean. All right, we've been following this one for a while now, and it closed up last week, but let's go to a monthly chart first. It's under pressure. It's under a lot of pressure. You could see that you have these topping tails, which is telling you have sellers above. Sean, I think you're coming down here, pal. $7.23. Not a good day on Friday. You had a pop-up higher on Wednesday, Thursday. You saw topping action Friday. We broke back down below support. I would avoid this. I wouldn't short it, but I wouldn't buy it here. I think you're going to see a 7 handle pretty soon on ATOM. Last one up, AG. First Majestic Silver. All right, so we broke support back here on the 16th. I should say the week of the 16th. It's got to hold 532. I think it will. And then we enter a consolidation range. And we've been in one for quite a while. It's got to hold 532. Big down volume last week. Daily view. It's probably going to go lower. It may just retest. We just had another alert fire off. Oil moving up higher. Let's wrap up First Majestic. We'll go back to oil. First Majestic is probably going to come down or close to 532. If we close down below the lows of $5.14, which was the lows back on the week of January the 28th, I would stop out. But I would be a buyer here on a light volume pullback to $5.32. Let's go back, check out the futures on oil. Silver firming up here, coming back a little bit. Crude. See how we're looking on a 30-minute chart now. Good price action. At this point, I want to know if we take out the highs of Friday. You're seeing a nice Bollinger Band squeeze set up here. You're also getting it on an hourly chart, even more so. This may squeeze overnight. Oil looking good. Let's check back in with gold. Gold up over a 0.25 percentage point. Looks like it wants to move up higher. All right, folks, that is it for this evening. Thanks for being here. It's my honor. Thank you for spending your time with me on a Sunday night. And everybody have an awesome, profitable trading week. I will talk to you soon. Be well. Don't forget about TrendSpider, 35% discount code. Use the link below on YouTube, above on Twitter. And I give it away free to our silver and gold level members. Like,